So during last week's trading action, we saw this tug of war going on between micro positives and macro negatives, and wanted to dive into that a little bit more on today's video. So that's what we're going to chat about. So those macro negatives that we saw last week, twofold. One, we continue to see a number of headlines on a daily basis about the rising number of the Delta variant COVID cases. And secondly, we saw some pretty intense and unexpected Chinese regulatory lockdowns. So the good news as far as the markets are concerned is that it appears as if those macro negatives were essentially offset by some micro positives. And those two micro positives we saw really strong corporate earnings, and we saw very positive corporate commentary, especially from the sectors that were most negatively impacted by the pandemic: airlines, hotels, restaurants, etc. And I think through all of that action last week, I think it's reasonable to say that the general outlook for the markets remains optimistic, remains positive. So let's chat about some of the anchors that we saw last week. We'll dive into that a little bit more. So there were two main anchors, we'll call them, that weighed on stocks last week. As I mentioned, number one, we saw that consistent news drip of Delta variant and the rising number of cases. Now, that really impacted investor psyche the most, I think, because there hasn't been any mention of wide-scale lockdowns going into effect just yet. So I think from a behavioral standpoint, it really impacted investors that way. But practically speaking, we haven't seen anything materialize in the way of lockdowns, restriction, etc. The second anchor that we saw that really weighed on investor psyche and the markets as a whole is we saw this unexpected and intense Chinese regulatory lockdown, and the Chinese government decided to target two specific industries in China. They targeted the ride-sharing industry. They also targeted the for-profit education industry. And as I said, it was intense and it was unexpected, and that action caused a lot of volatility in the Chinese stock market, which ultimately weighed across global markets. So I think the bottom line here is that you can read all the headlines about the Delta variant you want to. You can read all the news about the rising number of cases, but the stock markets are driven by two things. They're driven by earnings and multiples. And unless the rising number of COVID cases or the Chinese regulatory action, unless one of those two things materially upsets earnings or multiples, then I think it's reasonable to say that stocks are going to continue to stay resilient. So I would echo cautious optimism here. And as I always do, take some ownership in your own wealth building and financial planning picture, and just simply be aware of what's going on within your wealth building and financial planning world, so you can be as educated as possible when it comes to your financial house. Questions, comments, please drop them below. As always, thanks for watching. Have an awesome rest of your week. Take care.